Hello everyone, welcome back. In this video, we are going to introduce with the rectangle chart pattern. Now before studying the rectangle chart pattern, let us recollect what we have studied in the double top, double bottom, triple top and triple bottom patterns. So in those patterns, we see a consecutive 2 similar highs or similar lows or 3 similar highs and similar lows. Now, let us imagine the situation if more such high and lows at similar levels are being formed. So, there would be a price congestion within a horizontal area and that takes the shape of a rectangle. Rectangle is not necessarily a reversal pattern only, it can be a continuation pattern also. So, when we are talking about rectangle, we have to look for the breakout or the breakdown for both the directions in the case of uptrend or in the case of downtrend also. So, let us talk about the uptrend. How a rectangle is formed. Suppose there was initially an uptrend and then there is a high that is hit. Then the price retraces and then again moves up, again a similar high, then moves back. The low is similar to the previous low and then moves up and then moves down, and in this process it continues. It can continue for months or years also in some cases. So rectangle is a chart pattern where highs and lows are similar for quite a long period of time. They may not be exactly same, but with the realm of practicality they are almost similar. Now after this the price can actually move below, that is a breakdown, or move up. So a practical target after the breakdown or breakout is the width of the rectangle. But normally when breakout or breakdown happens, the price moves a lot more distance. So it is important to have a trailing stop loss and keep on part booking when we enter in a breakout or breakdown. So suppose we are talking about a continuation pattern. That means after a up move there is a rectangle and the price breaks out above the rectangle. In such a scenario, a person should take a long trade with a little bit of stop loss just below the upper line of the rectangle. And if it comes back, if it was a false breakout, it comes back and hits its stop loss, then it is okay. Otherwise, if it doesn't come back or if it retraces to the resistance line only, then there is a secondary entry opportunity. And from that, if there is an up move, someone should trail with the stop loss and the stock should go higher. Let me show you one example here. Here we are looking at the Larsen and Toubro daily chart. Here as you can see that a rectangle was formed in the chart between 2017 March to around November, December. And what happened? First there was an initial breakout in the month of September, but it was a false breakout. It came back very quickly. Then again there was a breakout in the month of November, and you could see that that breakout was a little bit not fruitful, but it actually retraced for some bit of time. Then the actual breakout happened in the beginning of January, and you can see after that the stock actually moved a lot higher. So in a rectangle there are this kind of false breakouts also. So one way to trade is the breakouts, and another way, when a rectangle is going on for a long period of time, someone can take reversal trades aiming the other end of the rectangle. So suppose at the top end someone can take a short with a stop loss just above the resistance line, and in the bottom end someone can take a long with a target of the other end of the rectangle and stop loss just below the support line. So when someone is taking the trade, so there are two types of trade, we understand. Now let us talk about a bearish reversal. That also comes after a up move only. So after an up move, if we see an rectangle being formed and if there is a breakdown from the rectangle after the rectangle is formed, someone can take a short trade with stop loss just above the rectangular support line. So in that case, If eventually the price goes much lower, he would have a lot of profit. But if the stop loss is hit, then he has to exit the trade. The basic point is that when you are talking about a rectangle, you have to remember there can be small false breakouts and breakdowns. So an ideal way is to take both kind of trades. One, if there is a rectangle being formed and we can see the small reversal trades within the rectangle from one end to the other end and from the other end to this end, that can be taken. And once there are breakouts with small stop loss, someone can take those breakdown trades if the movement is on the downside. So after an up move, there is rectangle and then a movement on the downside. Let me show you an example. Here we are looking at the Federal Bank daily chart. As you can see that in 2017 again, a big rectangle was formed which lasted from the month of April, May to the beginning of 2018. And there was one small false breakout on the other side. So someone could have expected that this move was actually breaking out on the upside, but soon it came back. So someone who could have gone long, he could have been stopped out. His loss might have been low, but then again for some time this rectangle continued and it moved downwards and then moved upward and then eventually it broke down. As you can see that eventually it came down a lot. The basic point is that when you draw a rectangle, it is important to understand that the consecutive highs and lows won't be exactly at the same level. So there can be multiple boundaries at small distance you have to draw, and when eventually the furthest of either of them, the support or the resistance line, get broken, then only you can be sure that it is breaking down in a proper way. And if the volume is on the higher side when the breakout or breakdown is happening, then you can be more assured. As you can see on the reversal, the volume of the stock Federal Bank actually increased. So you can be a little bit more assured that the reversal that was happening was actually for some more time and it can be sustainable. Now let us talk about rectangle being formed in the down move. So let us first talk about the continuation and finally we will talk about the reversal. So what happens? First there is a down move, then there is a price congestion, up and down, highs and lows are almost in a similar range and within a rectangular formation. Obviously, when someone is seeing this, he can take the reversal trade aiming the opposite end of the boundaries, and eventually when there would be a breakdown, someone can take a continuation trade that will aim for lower levels once the breakdowns happens. Again, the stop loss would be just above the breakdown point, that is the support line. Let me show you an example here in the chart. Here we are looking at the daily chart of HDIL. You can see that initially there was a sharp down move and the volume was high, and eventually what happened is that the rectangle was formed. There were consolidation with the highs and lows almost at similar level. There were two small breakout and breakdown, I would say, but they actually quickly moved back into the region, into the rectangular region. These were false breakouts and breakdown, and eventually there was a goodish amount of breakdown, but this time also there was a little bit attempt to move above the support line, as you can see here. But what happened eventually? Eventually the price moved down and went a lot lower. So that is why I say that there can be a retracement and we have to observe the retracement. If it is going much above the support line, then we can say that this was a false breakout and we should actually exit the trade. But if the retracement is small and eventually the price going down much lower, then we can be assured that this is the actual breakdown and we should be with the trade for longer period of time. And if there is supporting volume, here in case we don't see much volume as the stock coming down, but if we see that such a overall increase in volume evidence is there, then we can be more assured about the downward movement. Now let us finally talk about the final variant, that is a bullish reversal. After a prolonged down move, what happens is that again this range is formed with similar lows and highs. So one way to trade them is actually trading the range, taking long position at the lower end of the range and taking short position near the higher end of the range. So trading the range is one, but if there is a reversal, that is the breakout out of this range, someone can take a long position with a stop loss just below the resistance line, the erstwhile resistance line now becomes the support line. So if it moves up, and sometimes there is again retracement close to the line and then a little bit more than that also, but if it is not very big, then actually the price eventually moves much higher. And if there is supporting volume, that volume is increasing when the up move is happening, then we can be more assured. Let me show you one example here. Here you are looking at the Tata Steel chart, and this is a daily chart. Here towards the end of 2015 and the beginning of 2016, you can see a similar rectangle was formed. It was not a triple bottom. As you can see, multiple attempts were made on the lower side. So what happened, that when eventually there was a breakout, price moved a little bit higher, and then the price came close to again the support, extended resistance, erstwhile resistance line, which is a support line now, and then the actual move started, which took the stock much higher. And that's why we say that when you see such a breakout or breakdown, you should actually trail the stop loss instead of booking all your profit on a single go. So such a move which took the price from 250 to around I would say 450 or eventually 750, someone could have entered the trade and actually kept some amount of his trade position for a longer amount of profit rather than just booking around 350 or something. So that's why it is always important to take profits partially, and to have a longer amount of move, you should have a trailing stop loss. So this is all about the rectangle. Thank you for watching the video. Join us in our next video. Thank you very much.